Hello, friends. Welcome to the edition of the market update from Invesco Mutual Fund. Wanted to give our opinion about the repercussions of the efforts of the government in terms of demonetizing the currency notes of 500 and 1000 rupee denomination. We feel it's going to have a marked improvement in the behavior of the bond market in India. And now let's try and understand each of the steps we feel will follow. The first thing that we expect is that we expect legitimate amount of money to get reported back into the banking system. Our estimates are that around 2 to 3 lakh crore of money will initially get back into the banking system. So the effect is the liquidity within the banking system will go up because of improvement in the deposit base on the current and savings account. Because of higher level of deposits, we expect SLR maintenance, hence it means higher demand for government securities. Higher demand for government securities would result in net lower supply of government securities for the next few weeks and months. Hence, the remainder borrowing calendar of the government is expected to sail through quite smoothly over from between now and March of 2017. Because of absence of cash transactions within the economy, we do expect some decline in the consumption demand, and that is going to have moderation in the inflationary conditions beyond what was initially expected. So we have seen efforts of the government to bring down the inflation in the food prices. We do expect further moderation because of this effort of demonetization of currency notes, and hence inflation to trade lower from these current levels as well. That should open up bigger room for Reserve Bank of India to drop interest rates in the coming months. The effect of lower fiscal deficit is also expected over the next few years. Now, because of higher amount of legitimate transactions within the economy, in a very slow progress, we do expect the tax compliance to also eventually improve in a very slow fashion. Hence, the fiscal deficit of the country or the government is also expected to improve over the next few years, and hence it should bring down the borrowing program of the government over the next few years, which should also a bond positive. And thirdly, we do expect that because of the absence of black money, the demand for gold will also come off, and hence it should have an impact on the external current account and help in the behavior of the Indian rupee against other hard currencies, including US dollars. So, just as a recap, three big improvements. First is on liquidity, second is on the bond yields and inflation, and thirdly is on the behavior of Indian rupee. Thank you so much.
Mutual fund investments are subject to market risks. Read all scheme related documents carefully.